Alrighty YouTube, how we doing? In today's video, we're going to be covering how I managed to catch this bottom tick right here that ran for 140, well, I caught 145 points, but this ran for a total of 386 points that I missed out on. Alright, so let's hop right into it. As you can see, my entry was right here at around 10:15 a.m. We are on the 5-minute time frame. Caught this bottom, and I basically targeted this 5-minute unfilled fair value gap right here. Right? But to get into more detail as to why I was looking for longs, why my entry was exactly where it was, and all that good stuff, let's hop back out into, let's look at like the 15-minute time frame, for example. Okay? So what I preach and what I trade is power of 3 ICT concepts, right? I also use standard deviation, but what I like to always talk about in these videos is open, low, high, close, right? This is a pattern that we are always looking for, because almost every single candle on every time frame that is bullish opens like this. Opens here, has a low, high, close, right? And in between this range, right, sometimes it won't always look like that, right? It'll be something like this, but overall, if it's a bullish candle, this is what it'll look like. All right, so boom, what do we see right here? This is 9:30 candle. This represents the opening price, right? We create this low, and what am I anticipating? Price to come high, low, close. Right? Open, low, high, close. Simple as that. It works every single time. This happens every single day. Open, low, high, close. And if it was bearish and I was anticipating bearish price action, it would have been the opposite, right? So boom, I was looking for longs. All right, so if we hop on the 5-minute time frame, immediately I saw this candle right here manipulated, and I didn't expect price to push much lower. On the other hand, I thought we were going to take these pre-market highs. The only thing that was concerning me was this 5-minute fair value gap and how long we were taking to get up there, right? So right off the bat, I took the fib from 0 right there and 1 down here. And what do we see happen to the tick? To the tick, price comes down and respects OTE of this range perfectly. All right, so I personally missed out on that entry. So what I did was, once again, we got this low and this high on the 5-minute time frame, and I saw that price reacted to it perfectly. So I'm already anticipating price is not going to come down any lower. This low is protected, right? So what I did was I took the fib once again, but this time from this new high to this new low, and I set my limit at 0.705, which is OT once again, right? I got filled a little bit lower. I think it was slightly lower than this, right? I got filled a little bit lower, and I targeted this right here, this unfilled. Right, I targeted the bottom of it because I thought we were going to honestly tap into it, which we did, and then start to reverse. And when this started to reverse, I immediately started to think like, wow, I just caught low to high. This is crazy. But we did end up running for a lot more. But as we can see on the 1-minute time frame as well, we start to tap into 0.705, and this is my entry down here, and we immediately start to like push higher, right? We got some good reaction off of it, and we also get this inverse fair value gap right here. Okay, so it's a mix of ICT concepts and standard deviation what I started to trade, right? I've always been trading ICT concepts, but now that I've started to implement some standard deviation into it, my entries have just been so precise, right? So now that I'm pairing power of 3 paired with standard deviation, my entries have been so perfect. Power of 3 and ICT concepts, you know, reading order flow and stuff has helped me to understand whether we're bullish or bearish, and then standard deviation has helped me like get these perfect entries, right? So if this video helped, make sure to drop a like, comment, subscribe, all that good stuff, and as always, I love you guys. Peace.